Starting and running a business is exciting. It is a dream for many: freedom, control, and unlimited potential. But behind the glamour and success stories lies a harsh reality. Most businesses fail within their first few years. The number one reason is not marketing, product quality, or competition. It is poor financial management. Without a strong financial foundation, your business is like a ship without a rudder, directionless and doomed to sink. Today, we will explore 5 financial rules that every business owner must follow if they want to survive and thrive. Ignore these rules and failure is almost guaranteed. But master them, and you lay the groundwork for lasting success. Rule 1: Separate personal and business finances. Completely one of the biggest mistakes entrepreneurs make is mixing personal and business money. When you use the same bank account for both, it is impossible to track profitability or expenses accurately. This confusion leads to poor decision-making, missed tax deductions, and even legal problems. Separate accounts are essential. Open a dedicated business checking account, get a business credit card, and keep every transaction clean. This makes bookkeeping easier, simplifies tax preparation, and protects your personal assets. If your business is a legal entity like an LLC or corporation, mixing money can void your liability protections. Even if you are a sole proprietor, separation helps you see clearly what the business is earning and spending. Without this rule, you are flying blind. Rule 28. Always maintain a cash reserve. Cash flow is the lifeblood of every business. You can have great sales on paper but still go bankrupt if you run out of cash. Unexpected expenses happen. Equipment breaks, clients delay payments, or market conditions shift suddenly. Having a cash reserve means you can cover these surprises without panic. The rule is to save at least 3 to 6 months of operating expenses in an accessible account. This reserve is not for investing or paying down debt, it is for emergencies only. Businesses without cash reserves are forced to rely on high-interest loans or sell assets under pressure. Many startups fail not because they are unprofitable but because they ran out of cash. Protect your business by planning for the unknown. Treat your cash reserve as a non-negotiable expense. Rule 30. Know your numbers, profit, loss, and cash flow. It is not enough to hope your business is making money. You must know exactly how much it costs to run, what your gross and net profit margins are, and how cash moves in and out each month. Profit and loss statements and cash flow reports are not just accounting jargon. They are your most important tools for decision-making. Without regularly reviewing these reports, you risk overspending, underpricing, or missing declining sales trends. Many businesses grow revenue but lose money because expenses spiral out of control. You need to track fixed costs, variable costs, and one-time expenses separately. Understand your break-even point, the sales volume where your business neither loses nor makes money. Armed with these numbers, you can adjust pricing, control costs, and plan investments wisely. Ignorance in this area is a recipe for disaster. Rule 4. Set clear financial goals and budget aggressively. Many businesses fail because they operate without a financial plan. Goals like doubling revenue or cutting costs by 20% sound good, but without a detailed budget, they remain dreams. Your budget should allocate every dollar of income to specific categories: marketing, payroll, rent, inventory, and savings. Budgets are not restrictions. They are a blueprint that guides your spending and growth. Aggressive budgeting means challenging every expense and prioritizing investments that drive profit. It also means regularly revisiting your budget to reflect changes in the market or business strategy. Businesses that do not budget often run out of money mid-cycle, make impulsive decisions, or miss growth opportunities. Budgeting creates accountability and focus. Rule 50. Avoid taking on excessive debt. Without a clear repayment plan, debt can be a useful tool for growth, but it is also a silent killer. Many businesses fail because they borrow too much or take on debt with unrealistic repayment terms. Before taking any loan or financing, you must have a clear plan for how you will repay it, including timelines and sources of income. Blindly accumulating debt without a strategy increases interest costs and financial stress. It also reduces your ability to invest in the business when opportunities arise. Smart borrowing involves understanding the cost of capital and matching debt to cash flow. For example, short-term loans for inventory make sense if you have guaranteed sales, but long-term loans for expenses that do not generate revenue are risky. If you cannot pay back debt on time, lenders may seize assets or damage your credit. Avoid debt traps by only borrowing what you need and having a repayment plan before signing anything. Let us pause here and reflect on why these rules matter so much. Running a business without solid financial discipline is like building a house on sand. Marketing, product innovation, and customer service are vital, but without money management, none of those will save you. Financial rules are not about being stingy or cautious to the point of paralysis. They are about creating a framework that allows you to grow sustainably and weather storms. The businesses that ignore this reality are gambling with their future. Now, here is something many entrepreneurs miss: financial discipline breeds confidence. When you know your numbers, have a cash reserve, and a plan for debt, you are not just reacting to problems, you are preventing them. This mindset also improves relationships with investors, banks, suppliers, and employees. Everyone wants to work with businesses that show responsibility and foresight. Financial discipline is a silent language of trust. Take the example of a small software startup that ignored these rules. They raised a large seed round but spent extravagantly on office space, perks, and hires before they had a stable product or paying customers. Cash ran out quickly. Investors lost faith. The company was forced to lay off staff and drastically cut costs. This crisis was avoidable if they had a budget, knew their burn rate, and kept reserves. On the other hand, startups that carefully manage their finances attract better funding terms and have more negotiating power. One more thing worth emphasizing is the importance of adapting these rules as your business evolves. What works for a sole proprietor will not be enough for a business with dozens of employees and multiple revenue streams. As you grow, financial complexity increases. You may need cash flow forecasting, scenario planning, or more sophisticated budgeting, but the core principles remain the same. Separation reserves, knowledge, goals, and responsible debt management become even more critical at scale. Let us consider some practical tips to help you implement these rules right now. Start by opening a business bank account if you have not already. Use accounting software like QuickBooks, Xero, or FreshBooks to track expenses in real time. Set up automatic transfers to build your cash reserve gradually. Schedule monthly financial reviews with yourself or your team to go over profit and loss and cash flow. Create a simple budget template that you update quarterly. And before taking any new loan, write out your repayment plan and consult a financial advisor. It is also wise to build financial literacy continuously. Attend workshops, read books, and watch tutorials about business finance. The more you learn, the more you will spot opportunities and risks early. Remember that every dollar saved or wisely invested adds up over time. The discipline you build now compounds in value, just like your business profits should. In conclusion, these 5 financial rules are not optional if you want your business to last. Mixing personal and business money leads to chaos. Skipping cash reserves invites disaster. Ignoring your numbers guarantees blind spots. Operating without a budget wastes resources. And uncontrolled debt is a ticking time bomb. Your business will fail without mastering these fundamentals. The good news is that these rules are simple to understand and implement. They require discipline, consistency, and sometimes tough choices. But the result is a business that can grow steadily, handle uncertainty, and attract opportunities. Financial mastery gives you freedom as an entrepreneur. Freedom to innovate, scale, and enjoy the fruits of your labor. If this video helped you see what your business must do to survive and thrive, then you will want to watch the next one. It covers how to build wealth if you are starting from zero. Practical steps to grow your money even when you feel like you have nothing. See you there.